Teaching your kids about stocks. What is a stock? We can do this two ways. We can get really complicated and glaze them over, or we can keep it super simple. I'm going to try to talk to you today about keeping it as simple as possible and give you a couple ideas on things to do with your kids to really help them gain a strong understanding about stocks and how they work. The first thing is don't overcomplicate it. I can overcomplicate it, and I do too often because I'm fairly analytical. I can start talking about, a stock. Well, which exchange is it on? And is it a privately held company or is it a publicly held company? Here in the United States or is it international? Is it emerging markets? Is it a large company, a mid company, a small company? Stop. A stock is ownership in a corporation. That ownership includes assets, also participates in profits and losses. Done. That's a stock. It's all you really need to explain to your kids initially. And I would really encourage you to start having this conversation with them around 7 to 9 years of age. I know it seems early, but they're aware of it at this point. With my girls, when my girls were 7 and 9, I started a game with them about picking companies that they like. We still play this game all the time. In fact, I told you a story a few weeks ago about being out by the airport and looking at some airplanes talking about Amazon's delivery issues they were having a couple years ago. My kids understand that companies are in business to make money, most, unless they're nonprofit. And as a shareholder, I want to invest in companies and people and ideas that I think that are going to grow, that will be profitable. But that doesn't mean they're always profitable every day. The market, stocks don't continue to go up day after day in only one direction. They lose money and they make money. And sometimes they lose money not because the company isn't doing everything well, it's because there's market risk, meaning that there's been a natural disaster or governments are shut down or there's a threat of war or whatever it is. The market could get pulled down together, or companies are losing value, and even though your company is doing just fine, it can lose value as well. The best way to teach that, I found, is I had my girls pick 10 companies, and we did it as a family. I did ask them to try to pick companies that weren't all in the same sector. And I did that to try to teach them that there's different kinds of stock. Let me give you an example. My kids had a tendency to go towards technology stock, which I get because they're into technology. They love Apple, they love Google, they love Facebook, they like all the technology type stocks. But they also like Amazon, and Amazon is not really, it's technology, but it's really considered a consumer discretionary stock, meaning we can use our discretionary money to buy that. I also talked about stocks that were more consumer staples. Staples, things that we buy every day, even if things aren't going well. Shampoo, toilet paper, Kleenex, things that people continue to buy. There's several different areas of the market that you can look at, but have them pick companies, try to spread them out a little bit in different sectors that they really like. And then write it down. You can do it in a spreadsheet. You can track it in a spreadsheet if that's your thing, or you can write it on a piece of paper. But buy it one day hypothetically and write the price down and then start to track it. We tracked it on a weekly basis. I thought daily basis was not creating good habits. I don't want to look at it on a daily basis. If I was talking to my clients, I encourage them not to because it could make them crazy emotionally. So maybe on a weekly basis, we have a family meeting every week and we would look at our stock holdings once a week. And whether they were up or down, we reviewed them. And I have to tell you, the weeks they were down, I loved because it really illustrated to my kids that there is some fluctuation in stock prices. And it's not always rational, meaning the company can be doing a fantastic job. But a stock price can decline because of other factors in the economy. This was the best way I think I could have demonstrated this for my kids. It's funny, a few months ago, I ran across one of our very first spreadsheets, and one of the stocks that we had chosen that first round is now $1,000 a share higher than we originally bought it. Huge increase. But if you start to plot the ups and downs, it's pretty significant. And there's a lot of places along the way you probably would have chosen to bail out if you're watching it incredibly closely. So of course I use that as a lesson with the girls. But this is the best way that I've learned to really help kids understand stocks. I have a nephew who, when he was 11, said, it looks like you're giving me about $50 of money or $50 worth of presents every birthday and Christmas. Would you mind buying stocks instead? I want to learn about stocks. And of course, he knows that I'm in money, so I wasn't insulted at all. I really love the fact he was willing to talk to me about it. But here's what I found, and I found this with other clients too. First of all, it's very hard to buy stocks for kids under 18 because you have to have a custodial account. Second of all, it's very hard to buy stocks in onesies and twosies because there's trading fees and other costs that are involved. That's why I found that by having a spreadsheet and following stocks and doing it hypothetically is just as effective and a lot less of a hassle. Please let me know if you have any questions about how to talk to your kids about stocks. Next week, we're talking about bonds. Have a great week.